walking one day when I happened upon an old man. He was sitting on a bench, staring into the distance as if it were endless. I smiled politely as I passed, but his voice rasped behind me. A voice like his hands, wrinkled and often used, but still sharp with wisdom and concern. It was a question he posed to me. "How do I know that you exist?" he asked. I stopped and turned to face him. His deep-set eyes were traced with anxiety. I stood a dozen silent paces from him, but I didn't return to his bench. After a moment of thought, I spoke. "You don't any more than I know that you do." His lips twitched in what may have been a smile, but I couldn't really tell.
Hello, everybody. Welcome to another edition of This Week in Crypto. I'm Brian alongside Dino and our founder, Maxim. We have much to discuss here on an interesting week where Bitcoin has kind of ranged, Ethereum has dropped just slightly, and many altcoins have bled. If you have been heavily leveraged in alts over the last 6, 9, or even 12 months, you did quite well for yourself, but the last month has been a little rough, to say the least. And we're going to talk a little bit about the dominance that is starting to show for Bitcoin, discuss whether it may be continuing, look for
Just to test, do you guys hear me? Do you, okay, no, also the stream. Does the stream hear me talking right now? Oh, but I hear myself in the VOD. but I think it's only myself.
Testing,
Test.
testing, 1, 2, 3. Testing, testing, 1, 2, 3. Screen is visible but can't hear. Okay. Says we're good now, can hear now. Now it's back. Okay, seems like we're back. Sorry about that, guys. OBS is a thing that exists in this world, and it's not the greatest tool to use for a stream sometimes. This thing happens every now and again, and there's no real reason for it. You just need to kind of restart all of your settings, and seems like we're back live. Sorry about that. Brian, over to you. You can do your introductions again if you want, but in general, yeah, since we're already kind of 5 minutes in, we might want to rush through the general overview of the market and get right into the meat, because there's a lot of cool metrics this week to talk about.
You bet. Yeah, so very quickly, guys, once again, as Dino said, we're sorry that there were some technical difficulties, but I'm glad we're back on track here. Markets have been mostly down, but if you've been sticking around in Bitcoin, you're actually up about 0.5% over the past week. It may not seem like it with so many projects bleeding, but the number one true king crypto, Bitcoin is doing just fine, staying in that 36 to 37K range right now. But as we can see, the majority of assets here have been bleeding pretty heavily with, projects like Synthetics and ICP kind of leading the way in ground lost. So we did have a few exceptions, such as AMP, such as Theta Fuel, Kusama, Hex. But for the most part, about 85 to 90% of assets did lose some market cap over the past week. So we'll jump into a little bit on what we're seeing right now, including Bitcoin's dominance over altcoins. You don't often talk about dominance when you talk about one asset kind of just ranging at around 0.5% over the past week, while the rest of alts bleed. But that's still a form of dominance, because as alts have bled, many traders have traded out of their positions in alts and put their money in Bitcoin, whether it's simply because Bitcoin pairs are the only thing that's available to them, or because they're specifically trying to stay in crypto despite the reversal in price over the past month and a half here. But we'll look at a few of the health metrics, beginning with one of the most important, which would be Bitcoin's daily active addresses and its trading volume and social volume as well. And I'm highlighting here the daily active addresses over time. We can clearly see that it peaked actually right around the beginning of the year, followed by another peak the day, about 2 days after the all-time high here on April 14th. And it's really started to drop ever since then. This at the time looked a little like an anomaly, but we can see that it's kind of stayed here throughout late May. It spiked just a little in early June, and it actually had its lowest day in just about a year 5 days ago on June 6th.
Since I think October 20th, like it's been very, very low. And actually, if you, Brian, want to only show that one and remove the other two for a second, because I think we should stay on this metric for a couple of minutes, because I was talking to Max earlier today. We seem to have a little bit of a difference of opinion as far as whether this is potentially good or not good for Bitcoin. So first of all, if you can zoom out the last, let's say, 6 months, just so we can see, this is 6 months, right? Maybe a year. Either way, yeah. So as you can see, this latest drop is just the data not being aggregated yet for the last day. But overall, guys, in the last 3 weeks, the amount of unique addresses interacting with Bitcoin are down significantly. So I mentioned this last week as well. I mentioned it the week before. Between January 1st and May 15th, there have been only 9 days where the amount of addresses interacting with Bitcoin, meaning sending or receiving Bitcoin, have dropped below 1 million. So there's only been 9 days, basically a week and a half between in the first 6 months of price action, that the amount of addresses, unique addresses, sending or receiving Bitcoin have fallen below 1 million. Since then, I believe there have only been 3 or 4 days between May 15th and today, June 11th, that the amount of unique addresses interacting with Bitcoin have actually been above 1 million. So it's a complete sort of opposite. And of course, you would expect some of it because of its price action. But in general, on the whole, in order for Bitcoin to sort of sustainably increase in price, usually price rallies need a sustainable or sort of a slow and steady increase in fundamental activity, on-chain activity, the amount of addresses interacting with the coin, suggesting that the value is being transmitted on the network, suggesting that there is an increased demand for a coin in question. So Max, you and I talked about this earlier today. You seem to have a bit more optimistic view about the Bitcoin's daily active addresses. Like, yeah, they have dropped, but so has the price, right? So we seem to have stabilized around maybe 900,000. Actually, Brian, if you look at the rolling 24-hour addresses, it's a bit of a clearer picture, just because it doesn't cut off the latest 24 hours. So it's a bit more reliable. There you go. So yeah, we seem to have bounced back in the last couple of days to about a 1 million level. But there are definitely struggles. There are struggles to retain this same amount of activity that we've seen throughout the rally. Take it for what you will, but there are just less people and less entities using Bitcoin today than there has been a month ago, and there's no way around it. So Max, what are your thoughts about this metric and what it says about Bitcoin's chances to like reliably and sustainably recover from here? You seem to have a bit more of an optimistic view on this than I do.
Yeah, a bit more optimistic, but it's need to place it in the context. And the context here, as we've been declining in several waves or in several cycles from the last top. So if you look on this chart, you will see that the first we went down, activity went down, price increased, activity increased. So it means people were like generally very positive. They didn't consider to be like any dangers or nothing like this. But then next decline, we again went down, and it's mostly visible on the daily activities. It went down to some level, but then stayed relatively stable. And the last drop of the price, which like to 32,000, the activity was very strong drop down, but again recovered very fast, and the price impact was very little. Mm-hmm. So it's a kind of change in the pattern is similar, but a change in a way that the price cannot drop so much anymore. And it can be seen another metric which we are discussing here, because one metric alone doesn't give me much. But on another metric where we've seen that this low-end activity, which is stabilizing, can be combined with continued aggregation or accumulation of big whales. And they're known to be buying early, but if they are buying and others are less active, well, smart money, this is how they behave. So right. It's I don't know if I was able to bring it clear enough, but for me, the two metrics combined, it's a good buying zone. As is this one, or if we can fall down one more time, it will be even better buying zone. So the question is, we'll be able to fall down again.
Yeah, because this one, it definitely seems to suggest a little bit of like wholesale or retail fear, right? There's just an unease to interact with the market at the moment. Actually, Brian, if you don't mind me sharing the screen for just a moment, I wanted to share another metric. So I've asked our data science team to calculate this, because I was wondering whether this is just a Bitcoin problem, this decline in daily active addresses, or if it's a market-wide problem. So the first sort of clue is you go to Ethereum, right? The second biggest coin. What is Ethereum's on-chain activity looking like over the last couple of days? Actually, a couple of weeks. So I'm going to look at the last 6 months. And I'm going to plot the active addresses of Ethereum. And you can kind of see the same thing. In fact, you can even see a sharper drop compared to Bitcoin. We've gone from almost 800,000 addresses, the all-time high for Ethereum during its all-time price high, all the way down to, at the moment, around 390,000 addresses. So it's like a 55% drop in the last month. That's a fairly significant decline in the amount of addresses interacting with Ethereum. And, you know, Bitcoin is a purely speculative asset, but you would expect, especially with Ethereum fundamentalists and maximalists talking about all of these different use cases that are obviously prevalent on Ethereum, you would expect that activity on the Ethereum network would, you know, probably not drop as dramatically as it has. There's no way around it. It seems like overall the market drop has spooked a lot of people out. So I've asked our data scientists to calculate the overall average daily active addresses for all coins that live on Ethereum. So all coins using the ERC20 standard that have more than $100 million in market cap. So what you're seeing here, and I'm going to zoom in so you can see it a bit more clearly. What you're seeing is the average daily active addresses, DAA, for all ERC20 tokens with the market cap of above $100 million in the last 6 months. So a clear and obvious, although slight but sustainable rise in daily active addresses from 4,000 all the way up to 8,000 at its peak here. In the last month, we have lost all of those gains. On average. So obviously some coins, especially coins that are currently popular, coins that are pumping, some meme coins, they're probably going to be fine as far as on-chain activity is concerned. But on the whole, as far as the entire ecosystem is concerned, we seem to be, let me just remove Telegram here. We seem to be moving in a downward direction as far as on-chain activity is concerned. So it's something to definitely be mindful of. That not just for Bitcoin, but across the board, we seem to be experiencing a period of inertia by the market. There's really no, I think, better way to put it. So it's not just the daily active addresses, by the way. We see trading volumes being in a state of decline. I think we've also calculated transaction volumes. Let me see where it is. There's a bunch of different charts here. Yeah, so this is a on-chain transaction volume. So the amount of unique tokens being transacted on the Ethereum network for all ERC20 coins with above $100 million in market cap in terms of its USD values. So we're once again seeing since the peak here in May of 2015, actually you can say that this was the actual peak, but either way we are seeing an ongoing decline in the amount of US dollar worth of transfers of ERC20 coins overall on the Ethereum network in the last month. So, you know, it's safe to say that we're certainly in a state of market-wide paralysis by as far as what on-chain data is suggesting. So that's what I wanted to zoom in a bit as far as what this might mean for Bitcoin and for the market in general, and what you should be keeping an eye on. I think if you are hopeful about the market, one of the things that you definitely want to keep an eye on is what the activity on the network in terms of daily active addresses and transaction volume is going to look like in the next week. So I think these, like the Ethereum being at 390,000 addresses, this is even going to drop lower, very likely over the weekend. So, weekends are always the lowest as far as on-chain activity is concerned, just because it is the weekend. We're already at about a 6-month low as far as Ethereum's on-chain activity is concerned. I think we're going to drop even lower, maybe to a September low, even over the weekend. After the weekend, it's a question of, can we rebound? Can we see an influx of new blood and old blood back into the market as far as daily transfer of value? Currently, we're just not seeing it, Brian.
No, we're not. And if you don't mind me sharing again, I'll show how Ethereum looks on a address versus deposit
Sure.
comparison. All right, let me get this back up. So what we're looking at now is the amount of active addresses versus active deposits. So these active deposits are known deposit addresses that are firing off on the network on a daily basis in tandem with just the overall address activity. And we clearly see right after the all-time high was hit, we had a huge amount of active deposits. And right afterwards, that number gradually shrunk back down to about the normal range that we were seeing for most of the end of 2020. It was really small on the bull run. And that's significant because when prices rally, you'll often see this growing gap between active addresses and active deposits because people aren't depositing to take profit on this big rise. They tend to take profit, ironically, when the price is starting to fall. And that's why a lot of traders don't do very well. You actually want to be taking profit when it's rising, as tempting as it is not to. That generally is the right way to go in order to actually do well in the markets. But as we can see, both active addresses and active deposits have been declining significantly. And the ratio has kind of become a little bit negative compared to where it has been as of late, especially from about January all the way up until early May. So up until a month ago, everything was looking good with the ratio. And then active deposits, this would have been your warning sign right here. Right at the end of April, we had this huge spike that we hadn't seen since August in active deposits. And shortly after, that's when we had the all-time high. And we actually have a model that shows what the ratio looks like between active addresses and active deposits over the last day and week versus the actual 3-month average. So it's basically called the active deposits ratio versus 90-day resting average. And we look right here at Ethereum, and the 1-day versus 90-day active deposit ratio is in the negative now, as I said, at negative 46%. Generally, you want to be in assets that have positive numbers like Kyber, like Celsius, like Ocean, like a lot of these altcoins right now. However, the combination of an active deposit ratio to go along with a positive non-deposit address activity number is ideal. So what I'm essentially saying is when you're looking at address activity, you don't only want to see a big gap between active addresses and active deposits, you also want to see active addresses higher than it normally is, like we saw here right before the big deposit spike, when we had this huge gap in active addresses growing on April 20th and active deposits being basically at one of its lowest points over the past year. This was kind of utopia time for Ethereum, and it was, right around where we are now, actually at 2,400, and then it quickly almost doubled to about 4,300, where it hit its all-time high. So going back here, we essentially we see plenty of projects that have high active deposit ratios versus their average right now. However, all of these red dots here, these are the past 24 hours versus its normal resting average for just raw address activity, and they're almost all in the red. So we may have good address activity ratios right now, but the overall active addresses are low. And what we would want to see from altcoins to catch up on the growing Bitcoin dominance that has occurred over the past week is for these active addresses to actually start picking up in tandem with these green bars that you're seeing for many of them. So hopefully that makes sense, but it's one of the best leading indicators that I've seen to sort of signal when it's kind of Bitcoin time versus altcoin time. We don't have active deposits for Bitcoin, but we do have it for Ethereum, ERC20s, and a few other top cap altcoins. So very important model if you have your Sandbase Pro account active right now. Just ask us in the Discord. If you don't have the link to this, we'll give it to you and get you all set up. So going back here to mean dollar invested age, this is something we didn't cover last week, but one of the metrics that we really find to be an important one when it comes to a macro overview of how the markets are looking at any given time. We can see here Bitcoin's mean dollar invested age, which is the age in which the dollars or fiat have been invested in Bitcoin on an average sense. So all of the investments in Bitcoin, the dollars invested in them, generally speaking, you want to be looking at the lower the line goes, the more active those dormant investments have been. And it means that there's a lot of new investments coming in, because new investments start at 0 years and 0 days long, right, when they first come in. So combining the new investments with older investments that might be putting in new dollars, that tends to be what fuels rallies. And we saw here, going back to mid-December, a very steep decline, which meant that we were at about an average of just about a year per mean dollar invested age back in mid-December. And that dropped and dropped. If you watch this box here, you'll watch the numbers just absolutely decline in a hurry. And it got all the way down to a base right around that same point where I was talking about Bitcoin and Ethereum's daily active addresses being at their kind of utopian point. April 18th to April 20th, it got to about 178 days in terms of mean dollar invested age. And that is about half of what it was in December. So that was kind of the peak. And then ever since then, it's kind of ranged and actually started to rise here beginning just about a month ago. And shortly after this rise began, that's when we had this big drop off on May 11th to May 12th. And it seems to be continuing right now. And that's indicative of fear happening in the markets, traders being a little reluctant to put in new dollars, wondering whether the bull market, quote unquote, is over and whether a bear market has begun. And we're kind of ranging right now, but you can see that both Bitcoin and Ethereum, to a lesser degree, are both rising in terms of mean dollar invested age right now. And I find that pretty fascinating. What about you, Dino?
Yeah, so if you can zoom out to the last, let's say 6 years, and just for Bitcoin, I think it's more striking. So mean dollar invested age is a metric that we've developed at Santiment. Essentially what it does is it computes the average age of all units of Bitcoin on the blockchain, and it weighs that age by the average price at which each unit of Bitcoin has been purchased. So to put sort of a long story short, a rising mean dollar invested age slope, like we've seen, between 2018 and 2019, suggests a network-wide accumulation trend. It's a period in time where on average, the age of coins is growing, meaning that they're on average not exchanging hands as much. It's a stretch of time when Bitcoin holders are basically content with sitting on their bags and maybe even increasing their positions, right? But it's a holding period. And then a declining slope of mean dollar invested age, which we've seen in early 2017, in 2019, around the beginning of the end, as well as in 2021, obviously. This declining slopes suggest a period of redistribution. It's a cycle where substantial amounts of Bitcoin, especially those that were acquired at high prices, are moving to other addresses. They are relocating to new holders. So what we find very interesting, and actually, Brian, if you zoom out to 2013, you can actually see another sort of period of redistribution, the first period of redistribution in Bitcoin's history. But each of the last at least 3 bull cycles for Bitcoin has kind of coincided with a very significant decline in Bitcoin's mean dollar invested age. And then the bottom of this valley was sometimes very accurate in marking Bitcoin's price tops and the beginning of the next bear market, where essentially it suggests a tail end of a redistribution cycle and the beginning of the next sort of hodling period, where less value is being transmitted on the blockchain and as such might impact the price in a negative way. Now, obviously, historical performance is not indicative of future results. That being said, this is what we're seeing on a historical chart. We are seeing a very strong decline in the mean dollar invested age throughout each of the few recent or even distant rallies for Bitcoin. And the fact that in the past month, the mean dollar invested age slope has finally moved away from a clear downtrend to an incline might suggest that redistribution cycle is over. And that also kind of seems to fit what we're seeing on the network or on-chain activity charts, where daily active addresses for Bitcoin are dropping significantly over the last month, suggesting that there's less entities and less addresses, less people and users interacting with BTC on the whole, which once again ties in very reliably, I would say, or sort of makes sense, and it ties in with this rise in mean dollar invested age, which, like I said, suggests the beginning of a holding cycle or a holding period and the end of a redistribution cycle for Bitcoin. So it's not the greatest sign, at least according to historical data. Now, what does need to be said is that we have seen sort of fake outs. Like, for example, in 2016, we have seen a shorter, smaller rise in Bitcoin's mean dollar invested age, but then there was another sort of massive drop. We have seen in somewhere like April of 2017, another sort of slight rise, a little bit after that, Brian, just a little bit after it. Yeah, that one. So we've seen like a slight rise before that one in mean dollar invested age, and then another drop off. So it's not, for sure, it's not a guarantee that this is sort of the tail end of a redistribution cycle for Bitcoin, but it's certainly a concern, and it's something that we are keeping an eye on. This also, one other thing, this doesn't have to mean that in the short term, Bitcoin can recover. This is a very long-term indicator. As you can see, there's only been a few of these valleys in the last 7 years of Bitcoin's on-chain data. But from a macro perspective, this is one of the indicators that it's probably the sort of what they were looking on for the longest time frame, and it's not looking great. There's really no other way to put it. It can recover. It can, we can see another decline in Bitcoin's mean dollar invested age. But for now, the setup as it is signals an end of Bitcoin's redistribution cycle, potentially.
Yeah, some of you may be looking at this and wondering whether it's more of a leading indicator or a bit of a lagging one. And the answer is both, really. It absolutely does foreshadow future price movement. We could see very clearly when it peaked here, we were already kind of flattening out when it came to the mean dollar invested age. And it's not so much lagging in terms of, moving after the fact and just being more interesting than anything. It actually kind of works as a justifier. So when you're seeing a price drop like this, you want to see a bullish indicator would be if mean dollar invested age is continuing to slide down despite this huge drop here, and a justifier would be more so that it's starting to rise again, letting people know that kind of after the fact, because of this price drop, people are starting to become fearful and dormant, right? So two things can happen. The dormancy can cause the price to continue to decline because circulation is starting to drop, and that's what churns Bitcoin's price upward, is circulation and address activity. But it can also, the dormancy and fear can also cause whales to strike and say, okay, the market is now fudding. It's time for us to put our foot down and get these prices at kind of a discount and then start another bull rally by pushing the price up and getting people back in to FOMO. So we can kind of transition from this chart now and look at whale activity a little bit, just because I think it's an important thing. And we can still talk about funding rate and stuff, but I think whale transaction is a natural transition here. I'll get rid of Ethereum for a minute and just illustrate here what's been going on with the amount of $100,000 or above transactions going on right now. And we can clearly see that the big spike here, the biggest outside of the one that happened here in early February, happened right at the bottom that occurred at the conclusion of this big drop off between May 9th and May 19th. And we had a spike here of 6,486 whale transactions. These are 4-hour bars. And ever since this spike, we've been getting a pretty clear decline. We were resting at maybe 3,000 to 4,000 whale transactions, and we're now seeing kind of, anywhere from 1,500. We got to a low point here of about 1,200 at one point. But it's very clear that whale transactions are down, and the amount of massive movements from one wallet to another is declining with the lack of interest in Bitcoin right now compared to other assets, and also just the lack of interest in crypto now that the price has dropped about 50% from its all-time high, maybe about 45% if I'm doing the math right. But anything you're seeing here on the whale transaction count side, Dino?
Yeah, well, first of all, this big spike that you've shown, I'm of a pretty sound opinion that this was probably a capitulation spike, that we've seen a lot of large transactions being executed at this point in time. This point in time was, by the way, the maybe day or two after Elon said that Tesla will no longer accept Bitcoin as payment. So it's been a FUD-induced spike in the amount of large transactions on Bitcoin, suggesting that a lot of people were FUDding out even larger whales. Large addresses have been sort of FUDding out of the market and selling their bags, fearing further corrections. So that's one thing that I do want to mention. The second thing that I want to mention is if we look at the total holdings of large addresses for Bitcoin, Brian, I think they're showing an interesting pattern. You already have it loaded up, which is good. So this is, what we're seeing here, and we talk about this every stream. This is the combined holdings, total amount of Bitcoin that is held by addresses holding between 100 and 10,000 Bitcoin. So Bitcoin millionaire addresses, right? It's a large sort of scale of addresses, some obviously holding a lot more than others, but I think you can classify all of them as whales. In the past, well, first of all, let's talk about what happened between the all-time high for Bitcoin as far as its price is concerned and its lowest and its bottom here on May 23rd. Now it's already been another bottom, but in that period of about 3 weeks, between April 14th and May 23rd, between Bitcoin's price all-time high and I think the point in time when China said that they're going to crack down on Bitcoin mining, the amount of Bitcoin held by these large addresses, what you could consider Bitcoin whales, has dropped by 130,000 Bitcoin. So I think that's billion. Since then, we have seen finally this trend completely reverse itself. Yes, in the last 48 hours, there's been a slight decline, but the overall trend continues to be upward. So I wouldn't be, for now at least, too concerned, which seems to imply that, large addresses are starting to accumulate Bitcoin back. Not as a rapid pace as they have previously, but it's certainly somewhat hopeful that we, after almost a month-long decline in the combined holdings of large Bitcoin addresses, we are finally seeing them start to accumulate once again. So that's another thing that I think is very pertinent to keep an eye on moving forward. Like Max said, if daily active addresses are low, what that suggests is that the retail crowd and the wholesale market is sort of paralyzed at the moment. However, in that case, what you want to see is what the whales are doing. Sure, if daily active addresses are low, but the smart money is making the right moves, it could suggest a short-term price recovery for the coin. So it's a chart that we look at pretty much every day on our daily calls, just internal calls. And I would strongly suggest everybody with the SanBase Pro subscription to keep an eye on it. As long as we are seeing an uptrend in this metric, I think a potential for short-term recovery is there. It's obviously not guaranteed. However, if you look at its historical trends, and by historical, I mean throughout this latest rally, these last 6 months, pretty much every decline in the holdings of large addresses has coincided with a short-term correction. So on March 13th. So that was the all-time high at the time for Bitcoin. We have seen on March 13, between March 13 and March 15, there's been around 20 to 30,000 decline in the holdings of large Bitcoin holders. Yeah, right there. Back in March, Brian.
Oh, March, got it.
Yeah, there we go. So that was the first sort of decline that we've seen in a while, suggesting that Bitcoin holders might be large Bitcoin holders might be a bit iffy. And then right before the all-time high on April 14th, even slightly before, April 10th, April 11th, we have seen after a month-long uptrend, we have seen the beginning of a downtrend for these large addresses. So the last 2 times that Bitcoin's price rally has moved it into price discovery, what has marked its local top has been a decline in the large addresses, in the combined holdings of large addresses. So the fact that in the last 3 weeks, they've started accumulating again, hopefully is a good sign for the sort of short to midterm performance of BTC. So that's as far as whales are concerned. By the way, guys, as Max has already mentioned in chat, if in case you haven't seen it, please let us know in chat what coins you would like us to look into now. I'm going to talk about SanR a little bit, make a few predictions now, Brian, and then we're going to be taking some audience questions. So if you have specific coins that you would like us to look into from a fundamental perspective, from on-chain and social analysis, let us know in chat. One caveat, I say this every time. If you want us to do deep dive into a coin's on-chain data, make sure to ask us about ERC20 or coins that live on Ethereum. At the moment on Santiment, we cover on-chain data for Bitcoin, Ethereum, Ripple, Binance Coin, Litecoin, and then all of ERC20 or Ethereum-based coins. So we don't currently, and no data provider does, provide on-chain data for all of the blockchains. It would be impossible. So if you want us to do deep dive into a coin's on-chain analytics, make sure that it lives on Ethereum. Outside of Ethereum, obviously, we do have data for pretty much every coin in our database. That includes social activity data, development activity data, price activity data, and we can analyze those. But if you want to talk specifically about on-chain analysis, make sure that the coins that you're asking us about live on Ethereum, just to kind of save you guys the troubles. So Brian, if you don't mind me sharing my screen, I want to go over SanR real quick. So this is something that we've started doing every week. Guys, SanR is a platform that we've been working on the side for quite a long time, and it's been launched a couple of months ago. It started growing, and we're very happy about it. We hope that anybody that has not tried it yet goes and try it now. So the website is sanr.santiment.net. What SanR is a decentralized marketplace for price prediction signals. So essentially, what you can do on SanR, if you have an idea, let's say you were looking at these metrics all day, and you have an idea of where a particular coin is going to be headed next, up or down, you can set a prediction. Let's say we're talking about Bitcoin, we're seeing Bitcoin whales start to kind of accumulate. So we think, okay, there might be a potential for Bitcoin to recover, at least in the short term. You can set a prediction, and once you stake that prediction, there are 2 things that happen. First of all, you get entered into a bi-weekly competition where you reap rewards if your predictions are accurate. And number 2, your prediction gets recorded on the blockchain as an NFT. So it becomes like your own blockchain trading journal. And there are 2 very cool things that happens because of that. Number 1, everybody else that is looking at your predictions can be 100% sure that your predictions are true, transparent, and immutable, that you couldn't have changed it in any other way. So if you develop your reputation as a somewhat reliable and effective market analyst, in the future, what we want to do with this platform is we want to allow you to issue subscription NFTs so that you can tell people, okay, look at my performance in the past. I have obviously, let's say, for example, I don't know, let's check out one of these guys as an example. So last round, I am following Balrush. And Balrush's performance currently looks like this. Out of his 15 predictions so far, his performance is 70%. It's not bad, right? So if I, for example, want to keep an eye on Balrush's signals and be notified when he creates the next signal so that I might, copy trade him, he can in the future, he will be able in the future to issue subscription NFTs so that, his holder or his fans or followers can buy those subscriptions and follow his future price signals, right? So that's an added layer of complexity that we're planning to introduce to the platform. But what it does is it allows you as a market analyst, as a market predictor, it gives you complete control over the entire system of your market analysis, from the creation of the signal to deciding who gets to see, view, and copy trade those signals. And then even if you don't want to, follow other people, copy trade, even if you only want to use it for your own good, SanR can help you analyze your own biases about the market. You go over your previous predictions and you figure out, okay, for each prediction that you've made, you can see when you've made it and when you've closed it, and you can kind of see the performance of your prediction over time, and you can go back into your signals and analyze where you've gone wrong, what you can do better, and what were the biases that led you to make that decision, right? So whatever way that you want to use SanR, we think it's a very cool platform. And if you want to sort of compete against me, other people in the Santiment team, and other community members, and enter your prediction into a bi-weekly pool, this is how you do it. So let's say, I think that because of Bitcoin's whales sort of showing signs of strength, I want to say that Bitcoin is going to rise from this point on. By the way, we made the same prediction last time, where it's currently up about 1.7%. We open a forecast, we sign our message in MetaMask, and now it's going to show up here. Obviously, it takes like 5 to 10 seconds. So obviously, this is just a demonstration of how this works. Don't take anything, I think Brian already mentioned, anything that we say in these videos or streams shouldn't be constituted as a financial advice. You should always do your own research. We're just showing what our data currently says about the market. But if you want to compete against other people, or if you just for your own good want to start testing yourself as far as how you view the market, check out sanr.santiment.net and give us feedback on the platform, what you would like to see, what you don't like, so we can make it better for you guys. All right, I'm seeing a lot of different mentions and different coins in chat.
The poll is already up. Please vote, everybody. There's not too many votes so far.
All right.
We only have 6 people casting their vote.
Okay, so Max has shared a link to a poll in chat. So he's compiled all of your different requests. So go to that poll and vote on the request that you like the most, that you want us to analyze. And until then, while we wait, Brian, I think it might be a good idea to also check out Bitcoin's social data, because we haven't really talked about it today. And I think it's quite interesting what we're seeing. So I'm going to go here and I'm going to talk about 2 different metrics. First of all, I'm going to talk about the average sentiment of Bitcoin holders. I thought it was quite interesting. So this metric, guys, that you're looking at right now, outside of on-chain data, for those of you that are unfamiliar with our platform, we track over 1,500 different, or we scrape data from over 1,500 different cryptocurrency social media channels. So this includes Telegram groups, crypto subreddits, popular Twitter accounts, anywhere that we can find the main topic of discussions being cryptocurrencies. We try to have our ear on those channels and follow and listen to what they're talking about. So one of the metrics that we've developed from this data is called weighted social sentiment. The idea is we get about 100,000 new messages. Our system collects it on a daily basis. All of these messages get parsed through our system, and all the mentions of a particular coin like Bitcoin get labeled as positive, negative, or ambivalent by our machine learning algorithm. And the result is this chart. Essentially, it shows you whether the sentiment towards a particular coin is bullish or bearish, as simple as that. But it's very complicated from a back-end perspective. So currently, or recently, what we've been seeing is there's been quite a significant spike in Bitcoin-related sentiment over the last couple of days. Now, obviously, there's been a fairly significant drop-off more recently, but this spike, I think, it's fair to say it's been prompted by two different conditions or two different events. Number one, there's been a Bitcoin conference in Miami, which has, I think, garnered a lot of attention. I think you and Michael Saylor was there. There was quite a bit of talk about this conference, and what its impact on the price of Bitcoin might be. And then the more bullish news is El Salvador accepting Bitcoin as legal tender, which has kind of gotten a lot of bulls out of the work and maybe back into the market. So we've seen quite a bullish spike in bullish sentiment towards Bitcoin. However, it's been fairly short-lived. Over the last 24 to 48 hours, we're already seeing a massive drop back into bearish sentiment towards Bitcoin. Take this with a grain of salt. It could be a little bit. Our data could still be being calculated for the last 12 hours, so it might be a little bit shorter than this one, but it's certainly a move back into bearish territory. I think there are two reasons for this. Number one, El Salvador news didn't pump Bitcoin above 40K, which a lot of people were hoping for. Number two, IMF has announced today or said today that they are worried about El Salvador's decision to accept Bitcoin as legal tender, and they're concerned about legal implications for that decision. So we're back into negative territory or bearish territory for Bitcoin after a sort of very short relapse in the average mood of Bitcoin related mentions. Is this good or bad for Bitcoin? In general, based on some of our backtests, extremely bullish sentiment is rarely a positive sign for Bitcoin or any other cryptocurrency. And that, I think, makes sense from a market perspective and market behavior perspective in general. All of these people that look at fear and greed indexes, the idea behind those is that when greed is high, when the sentiment is bullish, and when people are overconfident in a coin's performance, it might suggest overvalued conditions and an increased risk of a correction. And then when the overall sentiment is very bearish, at the very least, it suggests a lack of bullish bias and market euphoria. And as a result, there might be a chance or a sustainable chance to for a price of that coin to appreciate in the future. So at the moment, we are seeing a fairly negative sentiment towards Bitcoin, which, based on previous backtests that we've done, is not necessarily a bad thing for Bitcoin. And also, it's not just for Bitcoin. If we look at all of the different top caps, most of the ones that I'm keeping an eye on have very low sentiment at the moment. The market is not bullish at all, as far as the data that we get from social media, which, I mean, it makes perfect sense, right? But it's still important to keep an eye on these markers. So this is Ethereum, and this is Ethereum-related sentiment. It's quite low. If we look at Ripple, okay, let me just show Ripple and Polkadot, and we can move into coins that people want us to see. Ripple is also very low. Ever since these bullish breakouts, the general mood of the crowd has been very, very negative. If we look at Polkadot, let's do that as the last one. Can we see the source of all this data? Somebody's asking, Gu Enrique. So I assume this is referring to social data. Yes, currently, Enrique, you can choose a source of data here. So at the moment, I'm actually only looking at Twitter data. I should have mentioned that, by the way. Thank you for reminding me. The reason why I am looking at Twitter's data is because our machine learning algorithm was trained on Twitter's data. So it's usually the most reliable. And number two, Twitter is one of the most, popular channels for discussing cryptocurrency prices and cryptocurrency moves. So currently we're looking at the sentiment of Twitter users in particular, and similar to everything else, the general or average sentiment towards Polkadot after this bullish breakout, as Polkadot started to rally, has been very, very low. So it's a sort of a market-wide consensus that people fear further corrections, and buying when there's blood on the streets could be an opportune strategy. It might not be, so don't think anything we say is financial advice, but it's certainly, according to our data, showing a inertia by the market, and in general, pronounced fear that we are going to see another drop of maybe down to like mid 20Ks for Bitcoin, and that's going to take the rest of the market down with it. Okay, I think we're done with Bitcoin and general sort of sentiment overview. Max, what are the winners of our polls? What do people want us to talk about?
Okay, let me put it on stream too. We have Chainlink and MATIC tied for first place, and then District 0x DNT on the third. Oh, now you're gone. Your sound is off. It's not on my
Okay, sorry, I muted myself.
Okay.
So what was it was Chainlink, MATIC, and then 0x and something else?
Link, MATIC, and District 0x.
Link, MATIC, and District 0x. Okay, let's start with the MATIC and Chainlink. First of all, thank you guys for choosing ERC20 coin so that we can actually do some on-chain analysis as well outside of just social and development activity data. Let's check out Chainlink. So Chainlink has been in a world of pain in the last month, pretty much the same as all of the other coins. I want to start with overall activity. I do this every time. Chainlink's on-chain activity, or in terms of just daily active addresses, shows the exact same pattern as Ethereum and somewhat as Bitcoin. So let me zoom out to the last year. So this is the amount of unique addresses interacting with Chainlink on a daily basis. We're currently at about 5.6 thousand addresses on a daily basis sending or receiving Chainlink. Okay, now this is fairly low. If you look at, okay, let me draw a line here. Let's draw a line since the start of the rally. Let's say this is the start of the rally here, right? Maybe here. This is the lowest it's been since the beginning of the rally. And like I said, it's not an isolated case. It's not something wrong with Chainlink in particular. Across the board, we are seeing reduced interest or demand for a lot of these coins. So the fact that Chainlink has been taking a pretty big hit is nothing to be surprised about. But moving forward, similar to Bitcoin, what we would like to see, if we're hoping for a strong uptrend, is a more sustainable rise in Chainlink's daily active addresses. Now, it should be noted that its price has also taken a huge hit. So there's not like a massive divergence between, it's not like the price is growing, but the on-chain activity is declining, which would be a major bearish signal, right? The price is declining and active addresses are declining. So it's a bit more, so it needs to be put in proper context, right? But overall, you can say that there's definitely a lack of market-wide interest in Chainlink and all of the ERC20 coins. However, let's put this in perspective. So 5.6 thousand addresses. How many coins on Ethereum actually have this amount of on-chain activity on a daily basis? Very simple way to find out. A screener is a tool that we've developed for you to kind of do filter out different coins based on a specific metric or specific metrics that we have on our platform. So what I'm going to do now is I'm going to filter out all of the coins that live on Ethereum that have less than 5,000 daily active addresses on average, just so we can see, actually more than 5,000 addresses, just so we can see how many of those there actually are on Ethereum. So let me show you how you do it. First of all, you reset all of the filters. So now we don't have anything selected. We have all of the assets that we currently track on our database, almost 2,000 assets. The first thing that we do is we go here to market segments and we say, show me only the coins that live on Ethereum. And that's gonna drop down the list to about 1,200 different assets. And then the next thing that we're gonna do is we're gonna go down here to daily active addresses, and I'm gonna say, show me only the coins that have more than 4,000. I think even that's gonna be enough. More than 4,000 daily active addresses on average in the last week. So let's see how big that list is. That list is 8 coins long. All right, there's Ethereum, there's 3 stable coins, there's Chainlink, MATIC, Shiba Inu, which is seeing a consistent decline in daily active addresses, by the way, and Wrapped. So yes, the amount of interest in Chainlink has been declining, but it's still among the top most actively used coins on Ethereum. So from a sort of a due diligence perspective, from a long-term perspective, I think it continues to be one of the fundamentally more sound coins, just according to the amount of actual demand for the coin and the amount of actual interest in the coin on a daily basis. Now, one other thing that I want to look into is Chainlink's MVRV ratio. So it's a metric that we haven't really talked about much today, but it's one of the more popular on-chain metrics. The idea of MVRV ratio is to try and visualize the average profit or the average loss of a specific group of Chainlink holders. So at the moment, we're looking at the 30-day MVRV for Chainlink. What that means is the average PRL, profit or loss, of all addresses that have acquired Chainlink in the previous 30 days. At the moment, it's at about minus 23%. So that's the average loss of addresses that have acquired Chainlink in the past month is minus 23%. So a lot of them are, underwater, essentially. Now, the way that on-chain analysts, some on-chain analysts at least, use this metric is that the higher the MVRV, the more unrealized profits there are. And as a result, the more risk there is that people are going to start claiming those profits and apply sell-side pressure and drive the price down. And then the lower the MVRV is, the less incentive there is to sell. The market is or the coin is undervalued across the board, and so it might be a more opportune time to accumulate. Obviously, there's no guarantee, but that's how people generally use this metric. Now I'm going to look into, I've gone too far. Got to look into the last 2 years of data. So, okay, so just want to kind of show you where Chainlink's MVRV is now compared to its historical values, because in general, what you want to see is, okay, what were previously historically peaks and bottoms, tops and bottoms, peaks and valleys as far as Chainlink's MVRV ratio, so that we can see what are sort of the established danger zones and potential bounce back zones. So at the moment, Chainlink is at about minus 23, minus 22%. This is fairly low compared to Chainlink's history as far as its 30-day MVRV ratio is concerned. As far as the average profit or loss of short-term Chainlink addresses, this is fairly low, which means that in a vacuum at least, it would allow for a short-term price appreciation before we move back once again back into these danger zones of about like 23%. Yeah, like between 20 and 40% is sort of an established danger zone for Chainlink's MVRV ratio. We've seen it go down all the way down to minus 40%, which is massively undervalued. The only place where we've seen it go that low is actually the coronavirus crash, and we all know how quickly the market recovered afterwards. So overall, Chainlink's MVRV ratio currently, at least the short-term MVRV ratio, is looking fairly okay. Now, let's look at the long-term MVRV ratio. This is the average profit or loss of all addresses that have acquired Chainlink in the previous 365 days. So it's a bit of a longer-term holders. And at the moment, they're down about minus 5% on their initial investment. So what that means is, number one, we are still sort of underwater, so there's not a whole lot of incentive to sell. We are not close to like historical lows. We could drop lower, but at the very least, from a sort of micro perspective, or looking at only at this bull cycle, it's fairly low compared to the rest of the cycle. So from an MVRV perspective alone, there is a potential for short-term price recovery, not just for Chainlink, but for a lot of these coins. I think Bitcoin is looking very much the same, right? So that's a more of a longer-term indicator that I also like to look into. And then maybe one other thing to keep an eye on is Chainlink's exchange-related activity. So how much is the Chainlink army panicking? Are we seeing massive spikes in the amount of Chainlink moving to exchanges, and how does that correlate with its price action? So actually we see three interesting spikes. This is the amount of Chainlink. Exchange inflow refers to the amount of link being moved to known exchange wallets on a daily basis, right? So let's examine these last three spikes because I find it quite interesting. These two spikes happen at both local bottoms, suggesting basically crowd capitulation, a period where a lot of Chainlink holders seem to have been moving their coins to exchanges, presumably to sell during the downtrend. Clear sign of short-term capitulation, right? And then the next time that we've seen it was right as Chainlink started to recover and hit above 30 bucks here. We've seen another spike right before, a start of a correction for Chainlink, suggesting at this point in time people were starting to realize profits and were concerned about a sustained uptick in Chainlink's price action. Now, if you look at daily deposits, this is the amount of addresses that are moving Chainlink to exchanges on a daily basis. We can see that it's been declining steadily, especially since the drop. So overall, I would say there's not a whole lot of new sell-side pressure for Link, at least relative to what we've seen in May. There's less and less addresses moving Chainlink to exchanges. There's not a whole lot of like big spikes in Chainlink's exchange inflow, suggesting that overall, I think capitulation occurred around here. And at the moment, the sell-side pressure is waning. It's declining a little bit, which might not be a horrible thing for Chainlink. I think, there needs to be a period of sort of a breather period where, market pain has sort of completed, and we're in a period of relaxation and upward, which can allow for upward trajectory. So overall, Chainlink sell-side pressure seems to be, at least according to on-chain data, seems to be declining as well. Last thing that I maybe want to take a look into is Chainlink's network profit loss. So this metric, and I'm going to end it here and then we can move into MATIC. This metric tries to analyze the total ROI of all daily transactions on the Chainlink network. So without going into how it works, you can read it all about it here. The idea is that these low spikes, or sort of these big dips in Chainlink's network profit loss, suggest that at this point in time, on average, all Chainlink coins that are moving on the blockchain are moving at significant loss relative to the last time they moved on the blockchain. And then these types of spikes, like here and here, suggest a period where Chainlink tokens that are moving at that point in time on the blockchain are on average moving at significant profit. So these would suggest profit-taking events, which seems to have coincided with a short-term correction. And for example, these massive drops suggest period of capitulation. It's a period in time where, on average, Chainlink holders are selling or moving their bags, but also presumably some of them, at least some of them, selling their bags at a relative loss compared to the last time those coins are moved on the blockchain. So let's zoom into the last 3 months. You can see that we've definitely had more drop-offs, or sort of more dips in Chainlink's network profit loss than spikes. The only really time that we've seen a spike was right before this correction here, as people seem to have been taking some profits off the table, obviously applying sell-side pressure. However, on the whole, I'd say more often than not in the last month, we've seen these drop-offs in net profit loss. So across the board, Chainlink holders are still in a bit of pain. There's still people selling at a loss. There are still addresses moving their coins at a relatively low prices compared to the last time that these coins were acquired. So there's signs of increasing FUD, not really increasing, but there's signs of consistent FUD, fear, uncertainty, and doubt among Chainlink holders. There's a sign of still like blood on the streets and unease by Chainlink holders, which could be a positive sign for short-term, at least, market recovery. Like if you see these two massive drops in Chainlink's network profit loss, both of them coincided with a short-term, at least, price recovery for Chainlink. And this is something that we see every now and then. So I would say, in conclusion, if I would need to put it in a bow, daily active addresses for Chainlink are declining, but so is everything else. So are all of the other coins. Chainlink is still one of the most used coins on the Ethereum network. Sell-side pressure seems to be declining, which could be a good sign. MVRV is relatively low, which could allow for further price recovery, although it's not near its historical lows yet. So it's kind of in the middle of the road. And then on average, we're seeing as far as network profit loss is concerned, we're seeing signs of ongoing pain by Chainlink holders. We're not seeing a whole lot of euphoria, right, and elation by people that are moving their coins at a loss. So I think fundamentally, a lot of it is going to just depend on what Bitcoin does. But I think fundamentally, it's not looking horrible for Chainlink. One thing that I would keep an eye on is whether its on-chain activity or daily active addresses start to rise. If we want a sustained rally from here on out, we're going to need to see people move back into these coins. There's just no other way about it. Okay, MATIC was the number 2, right, Max?
Yes, correct. MATIC and District 0x.
Okay, MATIC, right? All right. Yeah, actually, Brian, you want to take MATIC?
I can take MATIC, no problem.
Okay. Go ahead, because I want to get some water. My throat is getting parched.
Sure, sure.
YP says, I analyze differently the 30-day MVRV ratio. I'm looking for divergences between MVRV and price action. That's a good way to go about it. However, you're rarely going to see like a consistent divergences between the two, because MVRV is very often dictated by its price action. As the price drops, so will MVRV most often. And then as the price rises, so will the average profit of a particular group of traders, right? So there's going to be very few opportunities. And I agree. I sometimes also look at these divergences and they can suggest, like, for example, you will see times where the MVRV drops while the price is rising. That's a very interesting signal, which could suggest that people are already starting to sell their bags. But it doesn't happen all that often. So I do like to sort of look at it from a longer term perspective rather than trying to find those divergences, because it's quite a rare occurrence, at least in my experience. But definitely, for sure. I mean, we could actually talk about it one of these days, the divergences between MVRV and price and what that might mean.
I'll switch it. Give me one moment.
Okay, while Brian is doing that, let me just say, anybody that is not already a subscriber in terms of Santiment, app.santiment.net is the link to the platform. There's a link in the description of this video. When you log into the platform for the first time, you get a 2-week trial to try everything on our platform. From that point on, it's $49 a month. However, there's a discount code that Max is flashing on the screen right now, TWIC, which stands for This Week in Crypto. You guys, people that are watching this call, which is called This Week in Crypto. Once you add that code during checkout, you get 25% off. So I think it's a no-brainer. We're already one of the cheapest, I think, data on-chain and social data aggregators on the market, the most comprehensive one by far. So if you really like this kind of data, use the code and join the family. Another thing, while Brian is setting it up, it would be a very big help if you guys could like this video and subscribe. I know it's what all YouTubers say, but they say it for a reason. Like it or not, YouTube's algorithm only works, and they recommend their videos if people tell the YouTube algorithm that this video is cool. The way that you do it is by liking this video. So thank you for all of the support. If you want to share it with people that you think would like this, please do, so that we can grow our channel and we can put more time and effort into these videos, do them more frequently, and in general try to make a better product for you guys. All right.
All right.
Brian?
Thanks, Dino. Yeah, feel free to step away. I'm good to go.
Go ahead.
Max, you can see my screen okay, right? Excellent. So what we're looking at right here is the amount of active addresses that have been happening over the last 3 months for MATIC, and comparing that to the daily active deposits, which are the known deposit addresses that are firing off on the network. And we can see a pretty interesting pattern here. We have this huge spike that occurred after being pretty dormant throughout March all the way up until late April. And then we just exploded in address activity, and this triggered what was going to be a very large rise from the 25th to the 29th. We ended up falling a little bit, as did the price. And then we saw a repeat that really all culminated right here on May 18th, when we hit an all-time high of 254. Notice how both the active addresses and active deposits are both here at the very top where they peaked, and then it quickly fell off. And that's because the active deposits likely contributed to a lot of people taking profit right when this happened. When it did, we had a huge FUD decline. A lot of people jumped out of their positions, which I'll show in a second on the MVRV metric. But you can see a rebound here that people weren't prepared for after they sold their bags down here. Addresses stayed high. Active deposits didn't quite get to where it did back on May 18th when it repeated a week later. But regardless, we still saw a mild decline because of this moderate spike of active deposits. And ever since then, address activity has actually stayed pretty high. I'm quite encouraged looking at this because active addresses here in June is still much higher than it was back in March here all the way to late April. But notice how active deposits have kind of gotten all the way back to where they were in late April. So with active addresses still up to where I would call it kind of a new plateau compared to where it used to be back here, and active deposits way down back to where it was in March and April levels. This is kind of a bullish divergence on this metric alone. Now we can look at some other things too, but I like the look of one of our favorite leading indicators here with active addresses and active deposits. Now looking at whale transactions, we can see some interesting signs as well. We had the huge spike back here on May 18th when we had that all-time high where whales very clearly took profit. And then we saw this spike here, sort of a mini spike in comparison, but still this kind of triggered that we might be going back up as whales began to accumulate again. And then we saw this one, which looks like it was kind of a profit-taking spike. But look at just our most recent one that happened yesterday. This is our biggest spike that we've had in, just 3 days, but it's still pretty notable compared to where we were usually seeing the whale transaction count. So there might be something interesting going on here, and we'll look at another chart here to verify what might be going on with this whale transaction spike. We're looking at Bitcoin. I'm going to switch this over to MATIC. And I'm going to look at, with MATIC being at about $1.33 now, I'm going to merge the absolute values of 100,000, 1 million, and 10 million here. And we see a pretty good sign, to be honest. We've been accumulating, and I say we referring to whales, the whales that own at least 100,000 MATIC, which would equal about $133,000 or more. They've been accumulating pretty steadily since April 20th. And even through this all-time high, it doesn't look like they're dropping much. This is a pretty good sign telling me that whales are staying strong, especially when you look back here in mid-December all the way up until mid-March. There was a pretty clear decline in MATIC holdings where they went from 9.88 billion all the way down to 9.75 billion. So give or take about 113 million decline. But ever since then, we went from 9.75 up to 9.81. So about a, what would you call that? About a 60 million MATIC increase among these whale addresses. And that's pretty significant. It means that the top key stakeholders aren't going anywhere, and they feel pretty strongly that this decline isn't the beginning of just a massive dump that is going to just make the asset a fraction of where it was here at the all-time high. So whales seem to be more prone to believing that the price will rebound rather than decline. That's
Actually,
a great
Brian,
sign.
If you want to look also at the supply on exchanges, it kind of seems to support this as well. So yeah, there we go. So this is the amount, this is the total percentage of this is the percentage of MATIC's total supply on centralized exchanges, located on centralized exchanges over the last, this is last 6 months. So we've seen this period of decline in MATIC's availability on exchanges between the start of the rally and like late May. And we see this very often, every now and again, where there's a divergence between the price of the coin, which is going up, and the availability of the coin on exchanges, which is going down. The reason why that, in my opinion, at least why that happens is because it's a simple rule of supply and demand. There's less amount of MATIC in circulation as far as the availability of MATIC on exchanges, adding to a sort of reduction in supply. And as such, it inflates the value of every available MATIC coin to trade. Now, we have seen a slight, well, not really slight, but a relatively substantial spike in the amount of MATIC on supply in May, right? As far as its availability on exchanges. As MATIC started to reach its all-time high, yeah, so between like May 20th and May 29th, there's been a clear surge in the amount of MATIC moving to exchanges, suggesting that a lot of people were just scared. Since then, we're moving back down, Brian. It seems like overall there is another sort of period. It's obviously not as strong as we've seen in February, but there's a decline in the availability of MATIC on exchanges. It seems like after sort of a period of jitters by some MATIC holders, they are starting to offload their bags away from exchanges and not really move all that much to sell. So it could be a positive sign for MATIC overall.
Yeah, this would definitely be considered a bullish divergence on the short term, because ever since May 29th, the price has gone all the way from 186 down to 133, but the supply on exchanges has gone from 3.82% all the way down to 3.24%. And when, maybe I'd call that 15 to 20% of the supply is moving off of exchanges, that's a pretty good sign that there probably will be a turnaround. Once Bitcoin's network health starts to stabilize and start to look like it's moving up again, that's when a coin like MATIC should really thrive based on this chart. But I mean, from a macro perspective, I mean, we were at 14.8% of supply on exchanges on February 4th, and 4 months later, it's a quarter, maybe even a fifth of that value, which is pretty striking.
And I also want to say, if you look at MATIC's daily active addresses, it's actually one of the few coins that, I mean, at least I have seen in the last couple of weeks, that's actually been fairly consistent. So especially if you look at the rolling 24-hour addresses, Brian.
Sure.
The amount of addresses interacting with MATIC has obviously dropped since the all-time high, but since then, while like we've seen Chainlink, right, there's a continuous decline in the amount of addresses interacting with Chainlink on a daily basis. MATIC is ranging between like 7.2 and 9,000 addresses, 7.2K and 9,000 addresses. So there's a pretty established new range, it seems, or new level for the amount of unique users or entities that are sending or receiving MATIC on a daily basis. And it puts MATIC in like the top 5 coins on the Ethereum blockchain, which is quite impressive.
Yeah, I touched on MATIC a little bit while you were likely stepping away, Dino, but on top of the ranging at this new higher plateau, we're seeing that active deposits are kind of going like this.
All right,
they're definitely declining.
Sorry, I was checking on Discord whether everything's good with the stream. Sorry about that.
No worries. The other thing I wanted to show on MATIC, and I know we're about 20 after, so we should probably conclude right after this, but their MVRV, we're seeing that we're actually heading back into the negative range here, and we've been there for about the past week now. That's a good sign. We're actually at the lowest MVRV on the 30-day range since December 22nd, meaning that the average traders have really lost a ton of money, and there was likely quite a bit of FOMOing going on right before the all-time high, especially on May 17th when we were at a massive MVRV of 172% or so. That was a pretty good sign that a top was imminent, and sure enough, the very next day we dropped off significantly. Again here on the attempt to reach the all-time high again on May 25th. Big anomaly spike followed by a huge drop, and this is a great metric. We even have this MVRV model. It doesn't look like I have MATIC currently programmed on it, but the majority of altcoins are starting to show this bullish trend here, where they're underbought, meaning they're over this black line. If they're over this dashed green line, like a few of them are getting close, like Status and Synthetics, that means that it's severely underbought. But at least for the most part, MATIC would probably be in kind of this range here between 0.25, 0.5. and that means it's semi underbought and probably a better opportunity, less risk than usual in getting into it.
Actually, if you look at MATIC's social sentiment, it's quite cool. So you got graphs there, yeah. Choose the 12-hour interval just so we can see it. It's looking real nice. The patterns over the last maybe 6 months or so. Yeah, so what we're seeing there is we're seeing massive spikes in bullish sentiment as MATIC has started to rally. We've seen it first in like the March top. There's been a big spike, which marked the even further back in March. There we go. So right there, we've seen a big spike in bullish sentiment before eventually a correction, and then we've had a sort of a period of a month and a half of just a bearish sentiment overall for MATIC. Another spike in MATIC's price action, another massive spike in bullish sentiment, moving to a period of consolidation. We go back into bearish territory, and from a bearish territory, we move back into a massive price appreciation for MATIC. Immediately, the average sentiment blossoms, goes haywire. A market becomes euphoric. We drop down significantly. I mean, obviously this was a market-wide crash, but whatever. We're seeing another drop into the bearish territory. From that point, we recover. MATIC was one of the strongest coins to recover from a market-wide crash. With the recovery, another wave of bullish sentiment, moving the price downward. And at the moment, we are once again in a bearish territory. So obviously, historical performance, not indicative of future results, but MATIC holders are currently quite bearish. And if you look at what's been happening with MATIC's sentiment over the last couple of months and how that coincided with its price action, it's certainly interesting.
Yeah, take it for what you will, but this is actually the most negative the sentiment has looked since late November. And that is pretty significant. It means that we're at pretty historic lows, at least in the last year or so. And it's a stark contrast to these massive spikes that Dino is just discussing here.
Yeah. Okay. Anything else, Brian?
No. MATIC was a very good one to show. It looks quite interesting on multiple metrics that we have on our platform right now. So yeah, we can conclude it here. I want to thank Dino for the great analysis as always. Want to thank everyone for tuning in and telling friends and checking out our SanR platform. It's definitely growing rapidly, and we're seeing some great community members join slowly but surely. So make sure to check out SanR. You're going to love it. It's a great way to learn not just what other community members are doing, but what we are doing as staff members. And we'd love to see you there. So check that out. Make sure to use the discount code. What was that again, Dino?
It's TWIC, so you get 25% off. We're getting a question, how about DNT? YP, if you want to join our Discord and just ping me, IBIS is my name in Discord. We can talk about DNT off stream, or you can join our Same-Base Pro group where we talk about charts every day, all day. So yeah, we're going to have to cut it here. We're already about 20 minutes over time. But if you really want to talk about DNT, just ping us there and we can continue the discussion. All right. Thank you, guys. Talk to you all in 7 days. We're probably going to have a few videos in between from now on, so keep an eye on those. It's not going to be live. It's going to be like a midweek recap of what we're seeing on the charts, just to kind of keep you warm until these weekly streams. Thank you all for tuning in, and I'll talk to you all live in 7 days. Bye, guys.
Thank you all.